Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is packed with exciting news, including the claimant count change report from Great Britain and the Canadian inflation report. These Black Star events are sure to create fantastic trading opportunities for traders looking to capitalize on market movement. But that's not all. We're also giving away a limited edition branded mug. Simply like this video and comment the answer to the following question. If the oil price increases significantly, does it result in A. deflation, B. stagnation, or C. inflation? Make sure you are subscribed to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
Let's dive into currency news. The dollar has bounced back after hitting one-year lows. Wall Street is betting on Federal Reserve rate cuts and a soft landing, but there's a possibility that it's nearing a crossroads, with the market pricing in a narrow path of a small slowdown, but more accommodative policies. We may see a fork in the road before long. Now let's take a closer look at EURUSD. This currency pair is currently just above that primary support level of 1.628. If we get a close above 1.63, we could see a rally back up to those previous high points. However, if we break the support and close below 1.622, we could see a sell-off down to those lower levels. Moving on to Wall Street. Major US indices posted modest gains, helped by financial and industrial shares. Traders are bracing themselves for a heavy week of corporate results and comments from Federal Reserve officials, which could shed more light on the path of interest rates. With several banks kicking off first quarter reports with strong results last week, markets are gauging the health of the corporate profits and the economy. The Dow Jones Industrial Average rose 0.3%, the S&P 500 gained 0.33%, and the Nasdaq added 0.28%. Looking at the Dow Jones analysis, the US 30 is currently trading within an ascending channel. If we get a close above 34,000, we could see a rally back up to the next primary resistance at 34,200. Moving on to commodities. Oil benchmarks, WTI and Brent, both fell about 2%, their most in a month. This was due to the US currency extending its rebound from last week's one-year low, on expectations that the Federal Reserve will agree on another quarter point increase at its May 3rd rate decision. Now let's take a closer look at crude oil's analysis. This commodity is forming another rising wedge on the 1-hour time frame. If we break that pattern and close below $80.70 a barrel, we could see the price fall back down to $79.50 a barrel. Lastly, let's finish with gold. The yellow metal is hovering below key levels in early Asian trade, under pressure from a firmer dollar and treasury yields as markets reconsider expectations for an imminent pause in the Federal Reserve's interest rate hikes. Recent hawkish comments from the Fed officials have increased the chance of a rate hike in May and brewed uncertainty over whether the central bank will pause in June. The head of the Bank of International Settlements, Augustin Carstens, also warned that interest rates may need to stay higher for longer due to high inflation and rising risk of instability in the global economy. Looking at the analysis for gold today, the yellow metal is trading just outside its ascending channel. If we break back in and close above 2007, we could see a rally in this specific commodity. However, if we break back below the support level and close below 1,992, we could see a sell-off back down to those lower points.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.